to Wyckoff Power Charting. I'm Bruce Fraser, and I will be your host for this episode where we're going to do really a case study on Apple. And this is from a blog that I wrote this last week with additional charts, and we'll take a closer look at what's going on with Apple here recently. First, an announcement. So the TSAASF.org, which is Technical Securities Analysts Association of San Francisco, is going to hold a free webinar on the self-study course in technical analysis that was developed by this not-for-profit society in conjunction with StockCharts.com. So Brett Vium is going to present on Sunday, January 27th, 10 a.m., is going to present on this really good study guide course, which is free. And so it's a free course, and then after you've taken this, you can turn to the study guide, the exam of the study guide, and achieve a certification in technical analysis. There's a small handling fee that goes with this, but the cool part is that you, as a advanced technician or as a intermediate or new technician who wants to either improve their skills, sharpen their skills, or is new to the whole technical analysis universe, this is a really good thing to do for you to move on in your studies and developing your skills. And so please have a look at the self-study course, look at the certification exam. A great way to do that is to join Brett on Sunday the 27th. This will also be recorded and available to you to be looked at a later date. What do? You go to TSAASF.org, go to the home page. It's the top announcement, register here, and you'll be able to join that webinar, and it's going to be well worth your time. Okay, we're going to look at Apple. Apple Computer did an important thing, Apple Inc. They're more than computers, showing my age. So you can see here that a very important robust rally occurred into a climactic structure in the fall of 2018 and dramatic run up, but something very interesting happened in a short period of time, about 2 months. Apple went from having this robust advance with pauses along the way to all of a sudden having this big stopping action, distributional formation, and then a very sharp, swift turn downward into an important downtrend. And the question that we want to ask is, as we look at this, is what is it that caused Apple to just really almost like stop on a dime and go into this very short top and then turn down very swiftly and with a robust decline turn down into a very sharp downtrend? Is there something in the charts that would have told us what's going on and why Apple's been so weak, or is this just something that just happens? So anyway, we can see here at the peak there's a climactic surge and an automatic reaction, range-bound market. So we can see this is range-bound, and we should maybe clean up our chart here. And then thereafter, you can see an upthrust that occurred, and this upthrust is right here. After the upthrust, there was a very sharp decline that went down through the support area, and then the rallies that occurred after that were very poor in quality, stayed in the bottom half of the range, and then eventually just broke down out of the range. So this, you can see that after this upthrust, that this is really a big downtrend. And in the distribution area, we can count this. And now, keep in mind, this is a one box reversal point and figure with daily data, traditional scaling. And so we're looking at something that has a more of a swing trading quality to it. It's not like a really big point and figure count. It's short term, but it's still, this count was a stiff decline, produced a stiff decline. So now we look at this and let's take a count. So we count across and we can see here that there's a rally up underneath after a sign of weakness. So we have a sign of weakness here, one here, one here. This one went all the way through the support area and then was unable to rally back up into it. So we're going to take this as an important sign of weakness and an attempt to rally that failed as the last point that we can count from. We always count right to left, and we count across here, and we get 15 columns. 15 columns times one box reversal times 4-point scaling. Everything over 200 is 4-point increments in the scaling when you use traditional, and that produces 60 points of down count. So we have at 232 and 208, these are the places that we're going to take our minimum count and our maximum count. This produces 172, and this actually is 148, not 146. And the good news here, I made that mistake, and I went back and checked it right before starting the recording. So I want to tell you what it is. And then the good news is that actually makes this count perfect, hit it perfectly. And we're not looking for perfection, but it's interesting that that's in fact where we are. And so note also in this decline that in the second part of the decline, it accelerates lower and produces a selling climax at the level of the lower count. So this is interesting. We'll circle back to this in a minute. Okay, so now let's look at a vertical chart of what we just looked at on the point and figure. And we usually use them in conjunction with each other. And so here we can see buying climax, resistance area. The very peak price, we draw a resistance line. And then there's an automatic reaction. At the low of the automatic reaction, we draw a support line. At the time that we do this, we do not know whether or not, now we know that this is a stopping action that will produce a trading range. We don't know whether this is reaccumulation for a move up or it's distribution for a move down at the time that this starts. But as time goes on, we get more and more information that distinguishes the difference between accumulation and distribution. And so here we can see there's an upthrust, an immediate failure, and this failure comes swiftly back down to the support area, volume expanding throughout this. And so this is a big clue that there's a lot of supply hanging out in Apple. Now notice the attempts to rally after this decline into a sign of weakness. They're very poor quality, and it doesn't ever come out of the bottom part of the trading range thereafter. And so here we can see attempts to rally, and then a bigger sign of weakness, which is here, and then an attempt to rally again, which goes back into the range, but never does get back above the midpoint again. And so we can see here that something is distinctly wrong with the way that Apple's trading. And again, the volume advances, and then there's a point of a crack in the chart action, and this is after this LPSY. For you traders out there, this is like a swing trading environment. For you short-term traders out there, shorter term or swing traders, the rally of poor quality into the last point of supply, LPSY, is a place to start to look for a short opportunity. You can see that there is an immediate turn off of this LPSY with a gigantic gap in it. And it also coincides with a massive amount of volume. So you can see that this volume is substantial and shows that supply is engulfing this stock. And then you have gap down, and then an attempt to rally. It goes from where the old support becomes new resistance, and this is the final last gasp of rally into the underside of the what we call the ice. And this is the area that we took our count from here over to the buying climax. And I want to describe this trend channel. So we take this trend channel rally, the last point of supply here, and then also in the midpoint we see that there's another attempt to rally. We connect these 2 points. That's all you do, connect 2 points. And so you have this connection here, downward stride. You pick a point in between here, and you can see that there's a parallel line that we draw, and the parallel line we always draw is dotted. So this is called a supply line. This is called an oversold line. And look how well the decline stays in the stride of this downward channel. There's an attempt to become oversold here, and then it rallies up to the supply line. And then here, after this, there is an attempt to, there now is a decline that is accelerating. And you can see that after this attempt to rally, which is very poor, just a flat area, there's an acceleration downward with ever increasing spread and volume. Look at the volume here. This is climactic. This is a selling climax. The selling climax goes down through the channel. It's an oversold condition, and then rallies up into an automatic rally. Now we have a range-bound condition, and so we have support under the low of the selling climax. We have resistance above the high of the automatic rally. We expect that for some period of time into the future, there's going to be trading, which is generally going to be aimless trading up and down, up and down. And this is going to be a cause for building another distribution, or it's going to be support or accumulation for an important move up. And so here we have, we don't know yet, but by the time we get to the end of it, we'll have a really good idea not only of what kind of a structure it is, but also where best to trade it from if we want to be trading in Apple. And so this is a very important, interesting condition. So now it doesn't get us any closer to why did the market turn so sharply, because look at this advance. This advance is accelerating upward, but look at the robust decline. The decline is just relentless as it goes lower and lower and lower. And it really has not had a great bounce yet, but it is attempting to stop and build a cause of sorts. And so that's very important to us as Wyckoffians. So now let's move on. This is actually from a blog that I wrote back in September of 2016. And here you can see great trend channel. Look, we call in an uptrend, we call it a demand line and an overbought line. And so as we see, it gets overbought and it's staying largely within the channel, attempts to come back down, touches the demand line again. Well, actually, the demand line was drawn on this point and on this point. And so here you can see there's attempts to bound between them. It goes up here. Finally, it breaks down out of the channel and produces a distribution. Well, look at this. This distribution is 1, 2, 3, 4, 5 months. So much longer period of time than the one we just looked at. This is a weekly chart, much bigger structure. So we're looking at this, we're studying this, and we're seeing that after the distribution, there's a breakdown into a selling climax here, and then an automatic rally. So now we have range-bound market, support, resistance, attempt to upthrust above it, but it comes back down, almost touching support again, rallies, and the next time it does touch support. Now notice that the volume is generally high over here, but throughout the volume is diminishing. This is the opposite of what we were just seeing on the daily chart of the current situation, because what we're seeing actually is absorption. And so there's a period here where we have support. We have a spring here which takes out the support line and the lows, selling climax lows, secondary test, goes down, and then it immediately rallies back up into the range, comes back for a test. Very important. And then a more important rally is taking place here. And you can see that our chart, which is where the blog was written, is right on this huge bar that goes up to the resistance area on very high volume, and is in and of itself a good sign of an important change of character. Look at the rallies that we're getting. Good sharp rallies, quick, brief, volume coming in. The reactions are short. They don't have a dynamic quality to them. They stop at a higher low, producing the potential for an uptrend. But here we have supply coming in, which would suggest to us that this is a market that needs to trade sideways for some period of time. And then our expectation is that this is absorption. This is a cause being built. We can count this cause with a point and figure and see how much potential there is for higher prices, because this looks like a campaign opportunity, and you can read more about it in that blog. So the other thing is, because we're still in the range of the accumulation area here, and you can see the qualities of absorption as higher lows are being made, and the volume is generally not expanding on. You can see the volume is quite low on the second pullback, but certainly not expanding. So now we're thinking campaign, and we're thinking that there could be potentially more count built before it's done. So what happens next? Here's the point and figure chart. So again, daily data, we always use daily data. 3-box reversal. 3-box reversal is like a weekly chart. 1-box reversal is like a swing trading chart. First, notice that this distribution area that we looked at, which was around 5 months in duration, produced a count from around 130 down to 88, 87. And so, and it got within 1 box of getting to the low entry on this whole structure. So that's pretty good. Now, the other part is, let's take a count. So we have a pullback. This is the first higher low. Well, this is a higher low. And then look at this higher low is only pulls back about halfway of the prior advance. And so this is the place that we take our preliminary count from. And we have 2 segments that we count. The first segment gives us a count of 152 to 159. But the larger count goes 197 right here to 204. And so this really is a campaign count, and has lots of good potential in it for higher prices. You'll notice that we're in the area of around 114 right now at the time of this analysis, and the analysis was at about 96, but it's almost a 100% move with the data that we have available to us. So this is really a nice campaign. So let's update this. We do another blog, which you can look at, the Big Apple, April of 2017. And here we can see that we do in fact find resistance at this area where this climactic surge took place. It took a couple of months for a backup to occur that produced another pullback, not on really high volume, and also established an important uptrend in the channel. So we draw the uptrend, and we draw the parallel line on the high, which produces the up slope or the stride of the channel. And so now we can see that an important rally is taking place, And the areas that we would look to enter on would be on this pullback right here, or on the strength that takes it up out of this resistance area, or the second resistance area. And so this is a case where we can buy this stock on strength. And now this major sign of strength, another push through resistance, has Apple in a true new uptrend where it's gone from being under reaccumulation into just marking up. It looks great. And so what's the potential? Well, we said that this count could grow larger. The count that we had here went 197,204. Well, what if this count could be made bigger? And in fact, it was. This next higher low that went to LPS2, we decide to count that, which expands our count. So now we come over here and we can see right here we've added additional columns of count, 4 columns here. And so we can count across, take this bigger count. So we have a split count. Everything over $100 is at $2 scale. Everything below $100 is at $1 scale. Everything above $200 is $4 scale. And so we have to take, when we do our counting here, we have to do a mix count. And the mix count is that we have 12 columns here that are counted, that are up below 100. So 12 times 3 times 2, which is 72. And we have 19 columns at, they're all 3-box reversal at 1 point scaling, which is 57. This gives us, we add them together, this gives us a combined count of 129. And so this 129 takes us up to 215, 231. And so that is an even larger count than the preliminary count that we took initially. Now, there was a very robust rally. Look at the sheer wall of X's here that are in this up column right to there. And so you can see, kind of see them in there. But then there's some rallying higher lows, higher highs, and then another reaccumulation forms. Resistance, support. So we have a range-bound market, and we have an attempt to trade in a range. Well, look what happens is there's attempts to go down. These attempts to go down are unable to return back to the lows that were made here. And so this is a higher low, like a last point of support, turns off of this, has a really good rally. This is called a reaccumulation count. We love reaccumulations and reaccumulation counts because we can find wonderful places, lots of good entry zones to take on these. And so we can see here, because it's at a higher level, there's a smaller count, 11 columns, 2 point scaling, so it's 11 times 3 times 2, 66 points of objective here. 66 points gives us a count of 216, 226, almost a perfect parallel or hit confirmation count to the larger reaccumulation count that occurs over 18 months down here. This is about 18 months of trading range activity. So these big stocks that are really hot can go through long periods of time where they just go sideways, which is what the composite operator uses to build their positions because people become impatient. Okay, so big count, confirmation count 216, 226, 215, 231. And so this is going to help us to answer the question that we posed at the beginning, which was, what is it that caused the market to turn on a dime in Apple and just start to show weakness and go down? Well, it's because we have 2 big point and figure counts, which the fuel in the tank this fuel that was available to propel higher prices, which was buying by these large informed institutions, this buying put stock in strong hands, made it difficult to buy by other institutions and by individuals, and so the stock easily moved up higher. Well, the count of 231 missed the high of 232 by 1 point. And so 231, as soon as it reached this level, all the fuel was basically used up in these big point figure accumulations. There was no more fuel in the tank. This put this in a position to be distributed. This said that the CO was targeting this area to distribute their stock, and you can see that it turned down from this area, and it went all the way down to 148, which is right there. It went right to this reaccumulation area. Well, look at this substantial decline that occurred. This is, in Wyckoff terms, this occurred because all the fuel had been used up. And so this is the reason why these stocks, you need to count these big accumulation areas and reaccumulation areas, and also know where they're done, the fuel is all used up, and then also be extremely aware. You can't really see the distribution here that you can see on the one box reversal. And so we have one other case study that we can spend a few minutes on here, and this is FDN. FDN is our proxy for the FANG index. So the FANG stocks represent about 35% of FDN, a little more maybe. And we started studying this as a proxy for FANG back in the end of June. So that's right here. So you can see that there was a big change of character, and this is why we started to cover it, is because there was a rally, overbought condition, came back, reacted, big reaction, largest reaction really on the way up. So this is a change of character. We call this a buying climax. We draw resistance here. We have automatic reaction. We draw support here, resistance here, and we can see that there's wide swinging volatility that is a change of character from what preceded it. Now it's like swinging wildly in a trading range, and volume is high, shows their supply, and it goes into what we call a hinge here, series of higher lows, draw a trend line, series of lower highs over the market. This is a hinge. It rests on this, and at this point in late September, we said this could break down out of this hinge and show weakness, and sure enough, that's exactly what it did. In the little bit of time that we have left, let's go back and look at the point figure. Point figure here has 16 columns, 16 times 1 times 2 point scaling, 32 points down takes us to 114, 110. So now this is what happened. Same point figure count, 114, 110, went right to it, went one box below it, and then it's turned back up. And actually, the FDN and the FANG stocks have had generally a pretty good rally from here. So that's all we have time for today, but we thank you for joining us, and we will see you again next time.